All right, let's talk about something that seems a little weird in the world of investing. It's a story about a company that is absolutely crushing it. I mean, customers love it, sales are through the roof. And yet, its stock price recently took a nosedive. We're talking, of course, about Costco. So, this is the big question, right? This is the central puzzle we're going to solve today. Costco just dropped some fantastic earnings, way better than anyone expected. But instead of the stock shooting to the moon, it fell. So, what on earth is going on here? All right, here's how we're going to break it all down. First, we'll lay out what this conundrum really is. Then, we're going to dive into the numbers from their latest report, and believe me, they're impressive. After that, we'll pull back the curtain on the real engine behind Costco's success, what I'm calling the membership machine. And finally, we'll tackle that billion-dollar question: what's this thing actually worth? So let's dive right into it, the Costco conundrum. This is all about that strange, almost backward reaction from investors to what should have been amazing, pop the champagne kind of news. So here's the deal. Costco releases its Q2 results. Revenue beat expectations. Profits beat expectations. Now you'd think, logically, the stock would pop, right? Nope. It actually dropped 2.4% after the market closed. This is the heart of the paradox. Amazing news led to a falling stock price. Makes no sense on the surface. Okay, so before we can figure out why the stock dropped, we have to appreciate just how good the news really was. So let's move on and really take a look at the numbers. This is where the story gets even more interesting. First off, let's just talk sales growth. Their net sales shot up a massive 9.1% compared to this time last year. We're talking over $68 billion in sales in just one quarter. That is some serious momentum. And get this, the growth wasn't just isolated to one area. If you look at their comparable sales, which is just a fancy way of looking at stores that have been open for at least a year, you see strength everywhere. The US did great, but look at Canada and their other international spots. Double-digit growth. And the real kicker? Their digital sales, their online business, exploded by over 22%. And it's not just money coming in, it's about what they're keeping. Their net income, the profit after all the costs are paid, was over $2 billion. That's up almost 14% from last year. So let me just recap. Sales are way up, profits are way up, and they're growing strong all over the world. Okay, so if the numbers are so incredible, what are we all missing? Well, to really understand Costco, you have to look past the giant pallets of toilet paper and the rotisserie chickens. You have to look at what's really driving the business, the membership machine. This is their secret weapon. All right, here's the key thing you have to get about Costco. They don't make a lot of money selling you stuff. The profit margins on those products are razor thin. Where they really make their money, their primary earnings driver, is from that membership fee you and I pay every single year. It's high margin, recurring revenue. And believe me, that machine is firing on all cylinders. Membership fee income alone grew an incredible 13.6%. More people are walking in the doors every day. And big-time investors love this predictability. Almost 70% of the stock is owned by huge institutional funds. And why do they love it? Because we all keep coming back. The renewal rates are over 90%. It is an incredibly powerful and sticky business model. That kind of stability is like a magnet for a certain kind of money. We're talking over 2/3 of the company is owned by institutional investors. These aren't people just trading the stock for a quick buck. These are massive pension funds and investment firms that are in it for the long haul. That tells you just how much faith the smart money has in Costco's business. So how do they do it? How do they keep those renewal rates so incredibly high? It really boils down to this simple philosophy from their leadership. They are obsessed with value. By always trying to be the first to lower prices, they create this incredible sense of loyalty. We feel like we're getting a deal, so we renew our membership, which then fuels the whole profit engine. It's a brilliant cycle. Okay, so we've established it. Fantastic business, amazing numbers, loyal customers. Which brings us right back to the paradox we started with, and to our final section. It's time to talk about the billion-dollar question. What's it worth? And this is where we finally get our answer. See, a great company and a great stock are not always the same thing. Investors weren't selling because they think Costco is a bad business. They were selling because the stock itself might just be too expensive. The whole issue boils down to one simple word: valuation. The price had already baked in all that good news and maybe even a little more. So you might be wondering, how do the pros on Wall Street figure out if something's too expensive? Well, they build these financial models. And it's really not as complicated as it sounds. They basically do three things. First, they guess at how much sales will grow. Second, they estimate how profitable the company will be. And third, they apply something called a multiple, which is just a way of asking how much are people willing to pay for this company's future profits. And when you run those numbers, you get some pretty interesting results. One model, for example, projects that the stock could hit over $1,100 by 2026. So even with its super high price tag today, some people still think there's room for it to run, which just adds another layer to this whole puzzle. So really, it all boils down to two competing stories about Costco stock. You've got the bull case, the reason to buy, which says this is a rock-solid company with steady growth that you can count on. But then you have the bear case, the reason to be cautious. And that case says the stock is just way too expensive, with a PE ratio over 52, plus it's facing tons of competition and the risk that inflation might slow people down. And that's what it all comes down to, right? This is the ultimate question. We know for a fact that Costco is an absolute beast of a business. But is that amazing, rock-solid business worth the sky-high price that the market is asking for it? That, right there, is the Costco paradox. Thanks for digging into it with me.